Kitco Mining special coverage of Xplor 2024 is brought to you by Radisson Mining Resources.
Welcome back to Xplor 2024 in Montreal. I'm Ernest Hoffman for Kitco Mining. My next guest is Stephen Stewart, CEO and Director of QC Copper and Gold. Stephen, thanks for being with us today.
My pleasure, Ernest. Thank you very much for having me here. Always fun to be here at Xplor in Montreal.
Same here. So lots going on this year. It's a very positive attitude around here. We've seen there's a lot moving, and you're in a lot of those places. So this should be. I'm looking forward to your thoughts on a range of things. But first, just tell us a little bit about QC Copper and Gold. What is the focus?
So QC Copper just recently announced an acquisition. So it's going to be a business combination between itself, QC Copper and Gold, which has its flagship asset called the Opemiska copper mine complex. It's located in Chapais-Chibougamau district. It's the highest grade open pit copper deposit in Canada. It's got nearly 100 million tons at 1% copper equivalent, and of that equivalent is nearly 0.8% copper. So it's a very rich copper deposit with access to amazing infrastructure. In fact, I'd argue unparalleled infrastructure. And we're developing that project through the de-risking phase, putting a PEA on it. The real goal is to publish a PFS on that project within the next 18 to 24 months. And recently we announced the acquisition of Cuprum. So Cuprum is very analogous to what Opemiska is, except it's in Ontario. It's also in a mining-friendly jurisdiction of Pickle Lake. It's the largest copper resource in Canada, so it's not as high grade as Opemiska, but we think it has the potential to be larger in terms of tons, and it also benefits from, again, I would say I'm using the unparalleled twice, but I'm cheating a little bit, but it's got excellent infrastructure, just like Opemiska. It's on the rail, it's on the road, access to power. Again, brownfields environment with all sorts of benefits, and both projects sent their copper concentrates historically to the Horn Smelter in Rouyn-Noranda. So there's lots of benefits from putting these two assets together. From just a scale perspective, because I do think more often than not in this business, bigger is better. The combined company, which is going to be called XXIX, which is a unique name. I love the name. It's going to be our ticker symbol as well, and represents 29, which is copper's atomic symbol. Deal's going to close in December, and will be that that new name will have nearly 5 billion pounds of copper across resource categories under one roof. We'll have about $8 million in working capital, so we'll be well financed, and it's going to be an exciting company. And I think it's just really the early innings, if not even the beginning. I don't think the game's even started on this next cycle, and I think that is true across a whole suite of metals, including copper, including gold, and many others. So it's an exciting time. I'm looking forward to telling shareholders about this new opportunity, because there's a lot. It's a new twist to what QC Copper has been, and even just recently, aside from that acquisition, we also announced the acquisition of a gold deposit in Chibougamau, which we now own 100% of. It's about 500,000 ounces at 1 gram gold in the same camp where Opemiska is. So we're in buy mode. We're in long-term. We look for long-term deep value in this market. It's a very volatile industry, as everybody knows, but now's the time to be buying if you have the ability to identify the right opportunity.
All right, and you also have ore group. So there's a range of metals represented there. What's the latest that's happening in the ore group portfolio?
So the ore group portfolio, I'm the chairman of the ore group and the chair of all the companies within the ore group. What has been making noise lately would be American Eagle has had a wonderful few months, in fact a wonderful few years. We think it's the most it's a standout amongst copper gold porphyry deposits on the west coast of Canada. It's exceptional in terms of its geography. It's not in the mountains. It's low-lying terrain. It's 1,000 meters above sea level. The topography is flat, and most importantly, it's been pulling incredible drill holes near surface, but also within very, very large mineralized envelopes. So I think that's got a very bright future. It's getting a lot of traction, a lot of attention there. So that's a great project. And then another high flyer has been Awale Resources. It's a little bit different from the ore group, which likes to stay in Canada. However, we are also opportunistic, and we saw an opportunity present itself in Côte d'Ivoire, in West Africa, which is, from a mineral endowment standpoint, is absolutely incredibly sexy area to be. And you can permit and build things very, very quickly there. Although it was a new jurisdiction for us, but when we saw the intersections, that we're pulling out of there, and the opportunity that Andrew, the CEO, Andrew Chubb, and his team have been developing, which has paid off in spades when they drilled the best drill hole in West Africa in 30 years. With a 1,500 gram meter hole near surface, and they follow that up with a 600 gram meter hole. And then they've been drilling at the BBM, which is a separate zone. So he's made 5 discoveries on that land package. Again, Ore Group invested at a very low valuation, and it's run substantially. So that's just indicative of the type of opportunity we like to do. And then I won't list through all of our companies, but the other material transaction, which is still flying under the radar, is Metal Energy, which was our nickel company, which nickel has fallen on hard times, and which means I love nickel. So I'm going to watch us to pay close attention to the nickel space. But we also, in the meantime, just acquired the largest land package in the Highland Valley Copper District, where Teck operates the largest copper mine in Canada. And so now we surround the entire southern perimeter. We flank the Highland Valley copper operation. We've got resources just on strike to where the Highmont mine is, where they're mining. So it's just indicative of our doubling and tripling down on high quality assets that are available at really good prices right now.
Well, that's kind of where I wanted to go next, because you're obviously a big believer in the medium and the long-term prospects for the metals, for the mining space across the board. But what are your thoughts on where we are for the miners themselves? We'll talk about the metals, we'll talk about the market as well. But as far as where we are in terms of mining valuations, in terms of the prospects for M&A, where do you think we are? Obviously, it's been a bit of a rough time the last few years, in spite of some very positive stories and some very positive movement in the markets and for certain commodities. Where do you think we are?
It hasn't even begun. I think we're remarkably cheap. And when I say we're, I'm talking about even the big guys like the Newmonts and the Barricks and the Agnicos, all of whom have performed fairly well this year, but have not, there'll be exceptions, most have not performed as well as gold has. And the whole rationale for investing in the mining companies and taking that additional operation risk is because you want torque, you want leverage to the gold price, which hasn't trickled down yet, but that's coming. Again, it takes time. There's a sector lag. So the price of gold will move first typically, or it doesn't always work that way, and there's no necessarily rules, but oftentimes you see the metal move first, and then that free cash flow flows down, and it needs 1, 2, 3, maybe quarters of heightened free cash flow for the world to take note. But when you have gold flirting now with $2,800 and certainly $3,000 US, is on the table this year. Crazier things have happened, maybe more, and that's not, the sky's the limit in a lot of respects, and you look at historical multiples of price appreciation of gold. But those companies relative to the alternative, and what's the alternative? It's any other equity out there. It's NVIDIA, it's Microsoft, it's Google, and you look at those valuations, which, if you look at, call it the tech sector, I think they're like wildly inflated on a price earnings basis. Virtually any metric you look at, they're overvalued, and virtually any metric you looked at the mining industry, we're substantially undervalued. So I think, if you're investing into NVIDIA, or if you're looking to invest $1,000, historically speaking, the last few years, why on earth would you invest in Barrick when you can invest in NVIDIA? That's just sort of infinite liquidity. The capital appreciation of those share prices has been phenomenal. Why would you take the risk of the mining? So I think that there needs to be a devaluation or a deflationary event happening to the broader market, particularly the tech sector, for it to realize those gains and then to sort of exit and rotate into an undervalued sector, which is a bona fide sector, but been down in the dumps for 12 years now. I mean, we've had windows. We've had nice 6-month runs in various times, but it's been volatile. The industry has underperformed and disappointed, and it does that, just like any other industry. But I look at things at a very, very long-term lens, not quite as long as, say, China, where they think in 1,500 years, which is, not a wise thing to do for a government. I wish our government would think in terms of those time frames.
Or at least 20, maybe?
Yeah, maybe, sure. It doesn't have to be so extreme, but you need, if you are running a government, you do need to think about that. I always talk about the interstate highway system in the United States, and if you look at that on an NPV basis, okay, and you say I'm going to develop this long life, dynamic system, the NPV of it, you'd never build it. right? So sometimes the government has to take a leap of faith, build that infrastructure, just get out of the way and let private enterprise come in and fill the gaps and watch it grow. So anyways, I think as I digress, I'll get back to the point. The mining industry has 5 to 10 years of wonderful growth prospects ahead of it. And I hope we perform. And again, the big boys will move first, and then the IM Gold, sort of the mid tiers, will move next, and then it will really come towards the development and the exploration companies. So there is a pecking order, and it's just a function of time. I call it the sector lag, and provided gold stays on this trajectory and other metals as well, it'll all trickle down to the juniors where I live, and we're really well positioned, and we have a lot of torque. So our beta is exceptional. If the metal prices survive that trajectory time frame.
Okay. Now what do you think about these massive infrastructure projects in the United States, for example? Because you could argue, at least very optimistically, you could argue that this is the interstate highway system for metals. You're going to have massive solar demand. You have massive building out of infrastructure for EVs, which requires an enormous amount of copper. Solar was going to require an enormous amount of silver and copper. All the storage is going to require a lot of lithium. Meanwhile, we're seeing a bit of a turn in nuclear, where now what we're seeing for the first time in a long time, we're seeing a much more openness to building new nuclear reactors, like at scale, but also the modular nuclear reactors are becoming more and more interesting. So, do you see the potential for this type of government getting behind? Sometimes in terms of money, sometimes just in terms of permitting or a more positive attitude towards different types of these technologies. Do you see that? Do you see that potential there for things like, say, silver, copper, and some of the battery metals or energy?
So there's a lot to unpack there. Where do I begin? So I would like to see the government get out of funding private businesses altogether. I would like to see them get into the business of streamlining the permitting aspect. I'm a big believer, while I think government may have good intention, I think capital is much better allocated by the private industry. So that said, where the government can allocate capital effectively, or where it wouldn't otherwise be allocated, is infrastructure. Okay, so that's not necessarily, and I don't consider building battery plants infrastructure. I talk about the grid. What needs to be rebuilt is the grid, the ports, pipelines. All this sort of pipelines. I don't want them building. I don't want them permitting them. I want highways. I want road. I want rail. I want better airports. I want the mobility of people, the mobility of money to flow, and money is particularly sensitive to permitting. And so I think if they could do one thing that would have material impact, and it wouldn't cost them anything other than probably paring down some of the regulatory regimes, is just make permitting simpler, more streamlined, and no longer a black box. Now, I'm the first to tell you, you need permits. You need to do things right. I think if private industry operates in a world without any permits, often it leads to disaster. But I think the mining industry absolutely knows how to build a mine in a sustainable, clean way. They need to be held to be account, but you don't need 250 permits in order to do that. And it's just and I think the whole industry has become beholden to special interest groups. And I think we need to build a coalition of the willing. We need to think about how our competitors are operating. And again, I view the Chinese as a good example of a competitor. We are in competition with them. Hopefully not militarily, but on an economic basis. Even capital, on a capital allocation wise, we are competing with capital with China. And if we can't build a project, I mean, it's famous, they talk about, from discovery to production, call it in the West, can be 20, 30 years. I mean, it's crazy. And they don't, again, I'm not advocating we cut corners, we do things incorrectly, but we need to get serious about developing our critical resources. And on that point, as far as critical resources go, I think they're all critical resources. I don't think we need to be arbitrary about saying this one is and this one isn't. We need to take our natural resources very, very seriously. I think productivity in the West, in particular Canada, the United States, has become secondary or tertiary priority. And that's where I think government can invest without writing big checks, is sort of prioritize, streamline, We're not the bad guys. In fact, the mining industry should be totally supported and not given money, but we'd love tax breaks. So instead of keeping, we talk about, and I digress some more, but instead of keeping China out, okay, which I'm torn on, but I certainly don't want arbitrary rules of keeping foreign investment out. How about we provide tax incentives for Canadian and American businesses to invest in the juniors, invest in these things. So instead of keeping capital out and call it Western-friendly businesses to invest here, because we're just getting our lunch eaten. You look at South America, you look at Australia, they don't have those restrictive rules on China. And so where's China going? Well, they're going down to South America, they're going to Australia. And so again, our projects here are left stagnant. So I think we really need to totally rethink how we treat the mineral resource extraction and investment industries here. It's low-hanging fruit. 15 years ago and decades before that, Canada was a leader. And I think we've lost that lead, it's clear. But we can regain it, that's the good news. But we just need some smart thinking, smart policy, and some leadership. We need some strong leadership.
Okay, and then on the demand front, obviously we are seeing massive expenditure, public and private, some at the infrastructure level like you're talking about, but also just a lot of people want to buy EVs, a lot of people want to install solar panels. A lot of this decarbonization is it's a joint effort, not really a joint effort, but it's just that people all the way down the chain are incentivized to do this just for their own self-interest. So where do you see copper in particular on this? You were talking about, obviously, there's a kind of a pecking order or a chain, and there's a delay built into the industry of, the metal moves and then the majors and so on, and it filters down. Where do you see copper? I mean, we were above $5 in futures, maybe was it April, May? And we're still around, what is it, 440 or so? Pretty good. Which is, again, people are often kind of not necessarily very laudatory about copper, the copper market, but we're still doing quite well over the last 12 months or so. Where do you see copper on this chain of potentially, you have precious metals moving for precious metals reasons. You have silver now taking off, which is precious metal, also the industrial. And then copper is very, very tied into that silver story. The same things that would be moving silver on an industrial demand level also very much pertain to copper. So where do you see copper, both in terms of the time frame and in terms of the upside in this, what could be a commodity supercycle?
Well, I can't answer you on time frame, unfortunately. I wish I could, but I think copper is absolutely, critical. I said they're all critical, and they are. But in terms of the triage and prioritizing, what are the most important elements? I mean, iron ore is number one. Frankly, this building wouldn't be standing without iron, right? So I think you got to recognize the importance of iron. And then oil. I mean, we still operate on oil on this entire economy. Are we decarbonizing or electrifying? Certainly we are. I think that's inevitable. It's happening. It's cleaner. It's a better mousetrap. But that transition is going to take time. And it's not just about the EVs. It's about the electrification of everything. So I think that is coming, but it's going to take longer than these forecasts. There's no question about that. And so where does copper fit into that? Well, look, I think it's the third most critical mineral, if you include oil as a mineral. But anyways, copper is absolutely critical. Anything that has an on-off switch has copper. And copper isn't just about the electrification of things, which is going to be a huge demand side of the equation. But if you build these infrastructure, these roads, bridges, I mean, that's copper. So copper is the linchpin of the economy. It has huge growth potential as we continue to electrify, irrespective of the time frames. And I think the copper price has a very, very bright future. And I believe that all metals need to be considered in terms of a new paradigm of pricing. So these, so-called incentive prices, wherever they may fall, are all sort of underpin groupthink. Okay, and so all the mining companies think alike. They say, okay, well, $5 is the incentive prices, and does that automatically mean they press go? And so then you have 20 projects all at once going forward, and then just think about the dynamics of the cost side of the equation. If you got everybody acting together, what really needs to happen? Again, I'll go back to what I said the government needs to do. I think the industry needs to have leadership. They need to have an outlier and act like they used to act 20 years ago. Which leads to inevitably bad decisions down the road. Like as leaders act and say, I believe copper is going to $10, and so I'm going to buy this project now. I'm going to build it before the incentive price, before my competitors get in there and take up all the services in the pipeline. And I'm going to be building it first, and I'm going to be pumping out copper first when it does hit that $10 bucks. And when I decided to do it, copper was at $4.10, because I don't care about what the consensus incentive price is. So I think we need to see that sort of thinking. I think the industry at large is afraid of what happened in the last cycle, which will happen at the end of this cycle. It's inevitable in the human behavior aspect. But all those mistakes were generally made in the second half of that last cycle, or towards the end, maybe the last quartile of that last cycle. And the mentality is we're afraid to make those mistakes. However, they're harder, much harder to make when the valuations are a fraction of what they were. So there's this opportunity to go in there and be a leader, be bold, take risks. Okay, there's no what I'm saying is not gospel. There are risks associated here. All sorts of things could happen. But if you want to be a leader, you want to be the next big mining company, I think that's the type of mentality that you need to embrace and recognize that it's not that this time is different. This time is the exact same. We're just in a different era, and we're just at the beginning of this cycle. In fact, I don't think this cycle's begun. So it's an exciting time if you share that view, and I do have that view. I could be wrong, but I think on a risk-reward basis, it's sort of an asymmetric opportunity right now.
Okay, well, I obviously didn't want to share a time frame, but just in terms of the upside for copper, we've seen this move in gold. It's quite dramatic. No one was, even the optimists weren't predicting we'd be flirting with 2,800, potentially 3,000 by the end of the year. And then what does that mean for even just 2025 if we reach 3,000 by the end of 2024? What do you see as, without an exact time frame, but as the upside for copper, say a year, 2 years, 5 years down the road? What is your kind of baseline, or what is your somewhat optimistic target for copper prices?
Oh, geez. Okay, so
when copper does take off.
Sometimes when copper does take off, I think, again, I'm going to be a little evasive. Well, look, I think, on a 5 to 10 years, we're going to see $10 copper. The question is, does it cost us $9.50 to take it out of the ground? So it's not just about price. You have to understand the cost equation too. So when I say copper is going to $10, and it eventually will, and again, I'm not providing a time frame because I'm refusing to give it. It's because I don't know,
Of course.
and nobody knows. Okay, the central banks don't know, or the people making these nobody knows. All bets are off in the future. Things can change. However, I do take a long-term directional bet on these things, and the way we structure our investment, I almost say it doesn't matter when. We just know it's coming, and if you own your assets, you don't have massive option payments, so you own it. Whether it's in 2025 or 2030, you're there. And so as long as you have the right assets and you have conviction that it's coming, and I think it's inevitable, it's hard to avoid it, it's just a function of time. So I do think I think everybody needs to evaluate projects in a whole new paradigm of pricing. Double, triple where the prices are now, and sort of look to where the puck is going. So that's the attitude you have to have if you want to separate yourself from the pack, and sort of avoid, again, not to be cliche, but this groupthink. Everybody's talking about incentive prices and FOMO, and I mean it's so obvious. We've seen this movie before. So I really think it's going to be those who go out there and take a risk, and now's the time to do it, because there's some companies out there. There's one company in particular I won't mention, but I follow them closely. They're producing. They've just built a 300,000-400,000 ounce gold producer, and they've almost quadrupled in price, right? And they just put it online, and the gold mining company should have bought that company 2 years ago, right? And now they probably won't buy it for another 6 months, 12 months, and they'll probably pay twice what it is now. So it's like, you could have, had you been willing to take the risk, and we're a risk-taking industry, we're a risk-taking people. Projects like that, and I don't mean to single that project out, but there's opportunities like that right now, and that's why you're seeing us with QC Copper Gold buying Cuprum for $13 million. I mean, if you look at our universe, maybe $13 million is considered a lot, but it's really not. When you consider, we believe that both projects within QC Copper, soon to be XXIX, have a very good chance of being producing mines. High grade, mid-tier producing mines, access to infrastructure, and frankly the best country and two of the best jurisdictions in the world to be producing Let's not forget about the geopolitical risks outside there. Let's not forget what happened to the supply chains when something hits the fan and how you can't even get paper towel or toilet paper. So, I mean, in order to secure supply on our continent is going to carry a very, very big premium over the next 5, 10, 20 years. So that's why we love Canada. Canada has some work to do, but it's blessed with a mineral endowment, which is almost unparalleled in the world. It's blessed with a talent pool of executives who are geologists, engineers, financiers, entrepreneurs, who understand the business and understand how to allocate capital. There's no better place to be than Canada. I'm very proud to be Canadian. I just hope we right the ship a little bit, and we take advantage of this incredible mineral endowment we have here to make us one of the wealthiest countries in the world.
Well, thank you so much for joining us today, Stephen. This has been very interesting, and we should definitely circle back with you in the next little while, and especially if copper starts to take off and that famous incentive price kicks in for everyone. It'll be fun to see where you guys are, having gotten a little bit ahead of the curve.
My pleasure, Ernest. Thank you. Anytime.
I'm Ernest Hoffman for Kitco Mining. Stay tuned for more coverage from Xplor 2024 in Montreal.
Kitco Mining special coverage of Xplor 2024 is brought to you by Radisson Mining Resources.